Okay, so in this video, I want to share with you guys my dividend income performance in the month of September. Because September was another extremely rough month. As we can see here, the market over the past couple of months now has been nothing but straight down. It's currently Monday, October 10th, and over the past 30 days from this point, it's down 12% the market. So yeah, any way you slice it, the market has been extremely brutal. To gain some more insights on why this might be happening, I like this live coverage from the Wall Street Journal. So it says here that the next moves from the Fed are what investors are really focusing on, as well as the upcoming third quarter earnings season. We also have Jamie Dimon saying that he sees a US recession in 6 to 9 months. So he thinks the US is heading for a recession in the middle of next year and stocks have much further to fall. Another negative force in the stock market, especially with tech stocks and the QQQ, is the new restrictions the US put on chip exports. The Global X China Semiconductor ETF, which tracks 25 Chinese companies, dropped nearly 7% midday on Monday. We have auto stocks falling, Ford, Rivian, GM, even Tesla. The UK housing market heads for a mortgage rate shock. So, the gist of the news here is extremely pessimistic. And the VIX, which is a measure of fear and volatility in the market, it's currently 32.41. And historically, when this number is, let's say, in the mid 30s, it's usually a good tool in identifying cheap markets and good buying opportunities. So essentially, there's an inverse nature between the VIX going up and the market going down. And after reading all these news articles with you guys, I agree with the VIX. There's a ton of pessimism baked into the market pricing right now. Now, of course, it doesn't mean we're at a bottom or things can't go lower, but we are definitely in a dip right now, and historically, buying the dip has always been, or often has been, a beneficial strategy, even when it's difficult in the moment. Okay, so coming to my portfolio and filtering by the past month, we are down about 10.5% with $183 of dividend income over that time. And benchmarking that against the performance of the market during that same time, we're actually doing a little bit better, although being down 10% isn't anything to gloat about. And I do want to show you guys my deposits over the past month or so you can see what I've actually been doing. So I'm going to filter by deposits. And all throughout September, I have been buying the dip. We can see $1,000, 500, another $1,000 deposit. So clearly I haven't done a great job perfectly timing the dip. But to me, that's okay because that's an impossible task. And as prices continue to go lower, I'm just going to continue to take advantage and buy these assets at cheaper, more discounted prices. Okay, but to focus more on the actual dividend income, I generated $183 of dividend income last month while my portfolio was down 10% and the market was down 12%. And comparing that to previous months, that's actually the most I've ever earned. Now, as you guys saw, that's largely due to my additional deposits, but it's also because dividend income is a lot more stable and reliable than the price fluctuations of the market. And that's one of the things I love about dividend investing. It's very motivational because every time I make a deposit, I know I'm increasing my yearly and monthly income, regardless of what the market is doing at the current moment. And if I come to this page and filter by my dividend activity, we can get a good breakdown of where that $183 came from. So it begins right here on the 27th. XYLD paid me $52.73. VUG, this is a growth ETF, not dividends, but they still paid me $5.50. Then we have BST, this is a closed-end fund, and every month they pay me exactly $29.60. Next is Divo, they paid me $21.55. The S&P 500 itself paid out a quarterly dividend. For me, that was $26.14. And then my heavy hitter is jepi with nearly a $48 monthly dividend. And let's quickly check to see whether or not these dividend payments have been falling along with the rest of the market. So beginning with XYLD, you saw they paid me, how much did they pay me? They paid me $52.73. So if we come to their dividend history, their last monthly dividend was 40 cents per share, and that was a slight decrease from the previous couple of months, but largely it's in line with it. Nothing too alarming here. Next, let's take a look at the S&P 500 itself because they just happen to pay a quarterly dividend, and they paid out $1.47 per share. And here we can see how it stacks up against previous quarters, and it's one of the highest ever, even during all of this volatility. And remember, this ETF is just the S&P 500, no focus on dividends, but even so, all these companies, even during this recession, are consistently paying out to their shareholders. Taking a look at Divo next, their most recent monthly dividend payment was just shy of 13 cents per share, and just like before with xyld, it's a little bit lower than the average, but not a huge dividend cut or anything like that. As mentioned before, BST is actually a closed-end fund, and they have managed distributions of 25 cents per share. And the final name here is jepi, the heavy hitter for me, and the most recent monthly dividend was 48 cents per share. And just like with all the other ones, it's not the highest one ever, but it's also not indicating any massive dividend cut throughout the greater market, even though we're technically in a recession. So yeah, without a doubt, we're living through a very difficult time for us investors. The world is kind of on fire, inflation is out of control, all the major developed economies are slipping into a recession, there's a war in Europe, the VIX is over 30, and year to date, the S&P 500 is down almost 25%. And for me personally, over the past 1 year, I am down roughly the same as the market, but I've been generating consistent dividend income. And that's one of my main focuses with this entire account. I want to generate a secondary stream of passive dividend income that I can always rely on and fall back if need be. And as you guys saw with my deposits, I'm trying to take advantage of the falling prices and buying as much dividend income as I possibly can. That's gonna do it for the video. Hope you guys enjoyed. If you did, I appreciate a like and subscribe before you go, and I'll see you guys in the next one.